All right, today we're grabbing our hard hats and digging into the financial foundation of America's biggest home improvement store, Home Depot. They just dropped their latest quarterly results, and wow, the numbers tell a really fascinating story. One about strength, some struggle, and a massive, massive bet on the future. So let's get right into it. So the big question on everyone's mind is pretty simple. How is Home Depot really doing? If you look past the headlines, are they actually building a stronger future, or are we starting to see some cracks in that foundation? Well, we are about to find out. First up, let's look at the report card. We're going to start with the big top-line numbers that give us a quick snapshot of their overall performance. Okay, so at first glance, things look pretty good. Third quarter sales came in at $41.4 billion. That's up 2.8% from last year. But, and you knew there was a but coming, this is a really important one. That number isn't all pure growth. A huge chunk of that increase, about $900 million, actually came from a company they just acquired called GMS. So the growth story is, well, it's a little more complicated than it looks on the surface. Now, let's talk about the green flags. Because despite all the challenges, there were some serious bright spots in this report, areas where the company really flexed its muscles. The biggest standout, no question, it was their digital sales. They shot up an incredible 11% compared to last year. This is just proof positive that their big investments in making their online and in-store experience work together seamlessly, well, it is really, really paying off. And that's not all the good news. Sales to both their professional customers, the contractors, and the weekend warrior DIYers were both in positive territory. We also saw a solid 2.3% jump in those big ticket sales, purchases over $1,000 for things like appliances and flooring. This shows some really broad strength, with over half of their departments posting growth. Okay, so that was the good news. But now it's time to look at the other side of the coin, the red flags. These are the real challenges and headwinds that Home Depot is facing right now. And you don't have to take my word for it. The CEO, Ted Decker, he said it himself. They missed their own targets. And a huge reason for that? A surprisingly quiet storm season. See, when there aren't hurricanes or big storms, there's just way less demand for stuff like generators, plywood, and roofing supplies. That lack of storm activity really put a damper on sales. And you can literally see how their momentum just fizzled out during the quarter. They started August off pretty strong, positive 2%, but by the time October rolled around, comparable sales had actually flipped negative. That slowdown shows you that the pressure was really building as the quarter went on. And here it is. This is probably the biggest headwind of all. The CEO pointed out that the U.S. housing market is just incredibly sluggish right now. With interest rates so high, fewer people are buying and selling homes. And that turnover, that's a massive, massive driver for home improvement spending. And right now, it's at a 40-year low. That's a huge deal. So what does all that pressure actually do to the bottom line? Well, it causes these key profitability numbers to slip. Their operating margin is down, which basically means they're keeping a little less profit for every dollar of sales. Earnings per share also dipped. And return on invested capital, which is just a fancy way of saying how well they use their money to make more money, that took a pretty significant hit. And this quote from their head of merchandising, it just gets right to the heart of what's going on in the consumer's mind. People are getting nervous. They're hesitating to take on those big, expensive projects like a full kitchen remodel, especially if it means they have to take out a loan with these high interest rates. That caution is being felt big time. So with all these challenges, what is Home Depot's game plan? They are definitely not just sitting around and waiting for the market to get better. Nope, they are making a massive pro-sized bet on one very specific type of customer. So part one of this plan is just bulking up through acquisitions. They recently bought GMS, which is a huge distributor of specialty products that professional contractors need for big jobs. We're talking drywall, steel framing, all that stuff. This is all about becoming completely indispensable to the pro. And they didn't stop there. This comes right after their other giant acquisition of SRS, a distributor that focuses on professional roofers, landscapers, and pool contractors. Are you seeing the pattern here? They are spending billions and billions of dollars to completely dominate the professional supply market. But it's not just about selling materials anymore. They're building this whole high-tech ecosystem just for their pro customers. They've launched new tools, including this incredible AI-powered feature that can literally analyze a project blueprint and automatically generate a complete materials list. This saves pros a ton of time and money, and it solidifies Home Depot as their absolute one-stop shop. However, and this is a big one, even with this huge push into the pro market, Home Depot is being very realistic about the near future. They've actually lowered their financial forecast for the full year. They now expect sales to grow only about 3%, and they're warning that earnings per share will likely decline by about 5%.
Okay, so we've seen the good, we've seen the bad, and we've seen the big plan for the future. So what's the bottom line here? What's the final takeaway?
The entire story really comes down to this one central conflict. It's like a giant tug of war. On one side of the rope, you've got Home Depot making this enormous long-term bet on winning over the professional customer. And on the other side, you have this incredibly powerful headwind of a historically slow housing market that's making everybody, from pros to DIYers, way more cautious with their money. And that leaves us with the ultimate question. Home Depot is building this impressive, powerful engine to serve the pro customer. But that engine needs fuel, and that fuel comes from a healthy housing and remodeling market. So is their huge strategic bet big enough and smart enough to power them through all this economic uncertainty? Well, that is the real project they're working on right now.